Hey guys, how are we doing? Alex Kerr here, mortgage advisor at Mortgage Chain. Just wanted to jump on as soon as I heard this news about the Bank of England base rate, that they have actually increased their rates by 0.75%. So we've gone from 2.25% to 3%. That's happened today, and I wanted to get that out there, just do an off-the-cuff video. I've got the chat open just in case if there's any of you that are around at the moment and are watching this now. Just going to open this up here, bring that down there. There we go, perfect. So right, so what does it mean for the market? Hello, Hope of Hope. Hi, how you doing? Hope you're good. So what does this mean? What is the pattern that we've seen so far? We saw the Bank of England base rate increase a little while ago, and rates withdrew their products. They withdrew from the market, and then they slowly came back and offered, to start with, lower loan to value. No, I was right. Higher loan to value products, so you needed a bigger deposit. The rates were higher, and then they slowly started introducing rates up to 95% again. The market settled a little bit, and then in the last week or two, I've actually seen rates come down a little bit more, even after the initial rate rise. And now all of a sudden a bomb has exploded again, hit the market, and it's very likely that we're going to see this recurring pattern now of mortgage lenders will likely withdraw lots of products which are on the market at the moment. They'll then reprice them, so rates are going to go up again, and we will then see hopefully the market will settle again, because once the market settles, lenders normally will then bring their rates back down a little bit, because what happens is all of a sudden the Bank of England increase their rates and lenders then increase theirs, but they also put a little bit of a buffer in there just in case rates increase again, because they don't want to lose money off these rates. If rates then settle a little bit, they'll then bring those rates back down again. So why is this happening? Obviously, the Bank of England are increasing their rate in line with ever-rising inflation. This is the problem. They're trying to bring inflation down, which will have obviously a positive effect in the long run. And by increasing rates, it means that there's less disposable income for us. Therefore, prices will have to reduce, and that will therefore bring inflation down. What does it mean if you're a home mover, or say you want to remortgage? So again, if you're a home mover, exactly the same applies. The rates are going to increase. I would say that what it will do to the housing market, I think it will bring house prices down again. So even if you don't see that in the price that they're listed at, you are going to see bigger discounts available off the listed price. So definitely take that into account, and that should be able to have offset some of the increased rates by getting a bigger chunk off the purchase price of a property. Hopefully those two will balance out. So I've got some here we go. So I've got a question here from Fadi. So, hi Alex, for someone currently renting and has 50k in my bank account, do you suggest to buy a house as a first time buyer, or to keep renting, keep saving in the bank? So that is the $1 million question. It really is. Funny enough, before the Bank of England increased their rates, I was just doing another YouTube video to go live later tonight, and I was actually touching on this subject because it's very a very common question: should I wait? Should I wait, or should I buy now? Should I keep saving? So there's pros and cons to both, of course, but from me personally, I am never a fan of waiting. Okay, because it's human nature to want to wait, to hope that house prices might come down even more, rates may come down even more. But in my experience, I've been doing mortgages since 2003. I've seen the last recession, so 2008, that happened. And my experience, when people wait, things can change so quickly. In a blink of an eye, mortgage products could just be taken away. So the question I would come back to you, Fadi, is if as of tomorrow, to buy a property, you had to put down a 40% deposit or 50%, and that was the case for the next 10 years, would you be kicking yourself that you didn't make a move now? So my general way I look at it is, if you can make something work for you on today's market, then take it. If it's affordable, if the purchase price of a property that you can afford allows you to buy the property that you would like, and that we still have 95% mortgage products available, they could go any minute. If you can make a scenario work for you, then I would look to get onto the ladder. Now, I know rates have increased. You should be able to get that discount on the property price, but I would say another way to look at it is a mortgage is over 25, 30, 35, maybe even 40 years. Now, since the last recession in 2008 until this point now, that's only really half the length of a mortgage. And a lot has changed since 2008. So over the full period of a mortgage, a 35, 40 year, whatever you choose, you're going to experience different landscapes and a different type of mortgage market. You're going to experience high rates, low rates. You're going to experience a buyer's market, a seller's market. Just to touch on those points, we've been in for quite a long time a seller's market. That's where the seller is in control because there's so many buyers around, and the buyers are in competition with each other, so they need to put in the asking price or above. However, that's changed recently because of the increase in mortgage rates has actually, we're now heading more towards a buyer's market. I don't think we're not there, but we're coming away from a seller's market because the rates are increasing. Therefore, the buyers are not going to be able to buy the property that they wanted to, and therefore may need to reduce their budget. So in order to do that, the sellers are going to have to come down in price. It might even force more people to sell, because we were obviously at the height of the property market, and the prices and property prices have increased for quite a while. We've reached a peak now, and that's now going to start dropping. So hope that all makes sense so far. And by the way, if you are a first time buyer or a home mover, or you want to remortgage, that's the other thing. If you have got a mortgage that is expiring within the next 12 months, then I'd definitely be looking at your mortgage options now, because excuse me, it may be worth paying a penalty and trying to secure a rate now. Whatever you are, first time buyer, home mover, remortgager, I've put the links in the description. You can book a free chat with me. There's different links for whether you are a first time buyer, home mover or remortgage person, and they're different calendars because they ask a different set of questions during the booking. So feel free to book a free chat with me using those. Paul Gardner high. What deposit percentage do you think we should need now? So yeah, again, very good question. Difficult to know, difficult to understand. I would hope that 95% mortgages will remain, even no matter how much rates increase. But they are the ones that I worry about the most when rates do increase, the 95% mortgages. I feel because we've still got the mortgage guarantee scheme in place from the government, it might just create a bit of solidarity in that area. And the government are much more tuned in to the mortgage market than ever before, in my opinion. So I do think that, you know, whatever happens, whatever problems is caused in the mortgage market, there's always a way. When everything settles, there'll be new schemes that come out, that something will change. They will always try to help people obtain mortgages, get on the property ladder, that sort of thing. And there is always a problem that's trying to be solved. Obviously, back in 2008, when the market crashed then, until recently, mortgage rates have been historically low. And they've stayed that way for a long time. And that was to try and get people buying again when the last recession happened. So the mortgage market is there's always something broken somewhere that's trying to be fixed in some way. And, you know, there's always some issue. Now we're going to a new problem, and trying to solve the new problem will create another one for the future. It's just, you know, how it is. Okay, Fadi, yes, makes sense. Thanks a lot. No problem at all. If you've got any more questions, guys, please just do let me know. Very interested to talk about this at the moment. You know, not long ago, rates were almost 0%, you know, the Bank of England base rate, and we're now up to 3%. Inflation is, you know, we're in double digits now, which is, you know, very concerning. And this is what the Bank of England are doing to try and combat inflation, to try and bring those rates back down. So we are going to go through some difficult times at the moment, but I would put inflation more important than what the Bank of England base rate is. I would much rather inflation be lower, because that's going to hit us the hardest in our pockets. Obviously, a mortgage payment is obviously a big part of that as well, but it's cost of living which swallows the most costs from us. Jacqueline, how likely is a new mortgage application going to be approved if you've just been declined due to affordability criteria changes? Okay. Well, if you've just been declined and now we're going into higher interest rates, then, you know, that's going to decrease those chances even more, in theory, if we're talking about the same specific mortgage lender. But, you know, there are mortgage lenders that can lend more. There are equity loans now which top up your deposit, things like that. So if you just spoke to one mortgage lender, then that's going to be quite restrictive. However, you know, if you would like to have a free chat to discuss your options based on, you know, we've got over 100 mortgage lenders on our panel, with lots of different ways of borrowing more than the standard, you know, so-called 4.5 times income. So if you do want to take advantage of that, just book in a free chat. There's no obligation, and we can discuss to see if we can get your you know, your affordability up. I think when rates increase, I'll come on to your question in a minute, Richard. I think when rates do increase, as they have, I think the next 2 weeks we just wait. Okay, so that is the time I do wait, because it's going to have a knock-on effect, and there's a lag with everything. So property prices are likely come down a little bit more. mortgage lenders in the next week or two are likely going to pull out their products and then bring new ones in. So let's wait for that to happen, and then reassess the situation. All right. Okay, so Richard, according to normal trends, when are we likely to see rates come back down to normal and some stability? What is new? What is normal? This could be the new normal. Rates may not come down to what we were used to, which were historically low. But it's all in relativity. If the rates stay this high, then in theory, house prices should come down. So you can still end up buying a similar type of property, even though the rates are higher. You don't have to borrow as much. Obviously, when rates go low, the problem is house prices go up. So I would say that I would like to see house prices come down to combat the higher rates. So in regards to timescales, these things do sometimes take a long time. It's very difficult to tell. It's not going to be a matter of weeks. We've got Christmas coming up, that sort of thing. It's very difficult to see how the market's going to react, because things can change so quickly, as we've seen in recent times. Okay, so let's have a look. Where's the next question? For someone looking to get the first property next year, July to October, would you haggle the price? Could you do this for new homes? New homes are normally priced in line with changes to the market, but you might be able to. But certainly resale homes, yes, definitely be putting in lower offers. Even now, don't go in at the asking. The market's changed, so go in below. Try and have 3 offers. So your first offer, your second offer, and your third and final. Your third and final offer, you actually name it that when you're putting that offer in to the estate agent. Gives a better chance of success if you start low, build up. And when you say third and final offer, then the agent and the vendor, the seller, knows that you're not going any further than that. So that's what I would do. Your third and final offer will be the highest you can possibly go to. I hope that makes sense. So where are we here? Richard. Yeah, we've done that. Okay, Jacqueline, thank you. No problem. NA Radium. Hi, I currently have a mortgage offer up until the end of December. Okay, it was a 6-month offer. Are lenders likely to extend beyond this with everything that's going on? Our lender is Santander. Okay, so high street lenders you're normally going to be okay with. All right. I've had a few, unfortunately not with Santander, but I had quite a few when rates went up last time, that sort of thing. None of the mortgage offers were withdrawn. Okay. However, if you're with a secondary lender, and when I say secondary lender, I mean off the high street, maybe an adverse credit lender, they're the ones that get affected the worst, especially lenders like Bluestone Mortgages. They unfortunately removed all of their products that were secured by borrowers. So yeah, for you, I think Santander should be okay, and they should stay with that rate. Oh, are lenders likely to extend beyond this? Okay, right, so that's slightly different. So you're hoping for a mortgage offer extension if it runs out in December. If it's a new build, then possibly it should be okay. But if it's not a new build, then I don't think they would extend that. I would try, speak to the mortgage lender. At best, you might get a 30-day extension, something like that. But I think that's the best you're going to hope for there. So hope that answers your question. If it's a new build, let me know, NA Radium, or if it's a resale, what type of property is. That would be helpful to know. Feel free to put forward any more questions. Going to be here probably for another 10 minutes, and then I'm going to go and have some lunch. It's been a bit of a late lunch today. I saw this information, so wanted to jump on straight away. Yeah, just do this off the cuff, really. That's another question coming. So, hi, the time is now. That's who asked the question. Hi, I just got my residential property and thinking about getting a let to buy when the 2-year fix comes to an end. 2-year fixed. How can I put myself in a good position for this? Thanks, Bernard. Okay, so over the next couple of years, based on what's happening at the moment, we don't know what's going to happen. So your property price, the one you've just bought, could come down, which means there's less equity to do a let to buy. For anyone who doesn't know, a let to buy is where you let out your current property and buy another one, and potentially take some equity out of your current property in order to be the deposit on the new property. And you transfer your current property into a buy-to-let. Now, how to be in a good position for this? Well, you can't control the property prices, unfortunately. I was thinking of saying, pay as much of the mortgage off as possible, but then that could be good advice, it could be bad advice, because if property prices come down, that's potentially going to swallow your equity, which could have been sitting in the bank had you not done that. So that's a bit of a risky one. I would say there's not really much you can do. Just see what happens. Wait to see what happens in the market, and then in 2 years, just before the time you'd like to do the let to buy, I think that the market will look a little bit different to what it does now. I think that buy-to-let mortgages, buy-to-let mortgages have been squeezed quite a lot at the moment. There's not a lot of rental calculation to make it work, so instead of your typical 20-25% deposit, that's now increased significantly in order to make that work. So the buy-to-let market, I do think, is in a bit of bother at the moment. So hopefully in 2 years' time, there'll be something else that has come in to counter this problem. It's a resale property, NA Radium, waiting on probate. Okay, you... Santander, I've experienced two sides with them. Sometimes they're very flexible, sometimes they're not. So fingers crossed that, fingers crossed they will increase it. But probate, God, they can take a long time, can't they? So I don't know. It's a difficult one. I would probably try to speak to them as quickly as possible. My feeling is that they won't give you another 6-month mortgage offer. I hope I'm wrong, but that's my feeling. You might have to extend it month by month and just try and get that probate done as quickly as possible. Thanks very much for the response. Yeah, no problem. The time is now. And on talking about the time is now, just going to be breaking shortly, so if anyone's got any more questions, let me know. Just trying to think of maybe something to finish on here. Okay, so anyone with mortgage offers that have already been produced, so the mortgage offers on the table, if you're with a high street lender, then I think you should be okay there. I don't think that they'll withdraw the mortgage offer. I would just try and get to completion, as quickly as you can. If you were delaying completion for any reason, then I would just try and, cut that short, and whatever it is the reason, just try and solve that another way. If you've had a mortgage application in and you haven't got a mortgage offer, then most high street lenders will honour those rates. However, what I do see, unfortunately, when rates go up is a bigger increase in declined mortgages. So the ratio of declined mortgages increases because mortgage lenders want to basically, they don't want to lose money on that particular product, so it really reduces the flexibility that they might have shown on your application. So you need to be squeaky clean, vanilla, 100%, in order for them not to decline the mortgage. If there was any issues, they are now going to be magnified at this precise moment in time, because the lender will potentially lose money on the product that you're on because rates have gone up again. And then when rates settle, the flexibility back into the application will come back. Hello, any advice? This is from Jesus, Carnivorous Jesus. I don't think I can say that word too well. Hello, any advice on price negotiation given the updates? Would it be sound to offer 10%? Yeah, so I did touch on this a little bit. It depends what end of the market you're at. Are you buying a flat for £100,000 or a house for £300,000 or something like that? If you could let me know the price, that would be handy. I wouldn't say that a percentage, 1% would cover every scenario. I'll give you some examples. Now, before today's increase, I had three examples of discounts off properties. The first one, I had a client, the property was on the market for 170,000, they got it for 155,000. Property 2 was on the market for 250,000, they got it for 235,000, and property 3 was on the market for 370, and they actually got that for 345. So that was quite a big increase, or a decrease, should I say. So let's have a look at the percentages there. So yeah, I mean, on average that was about a 7% increase, 7% reduction on the property price. I think with rates going up even more, that will push that percentage up even more. So sorry, it's a flat for 200k, you're a first time buyer, 10% deposit. So 10% would be 20k. Do you know what? I think in a few days, once this higher rate has kicked in and everything like that, I think there's a possibility you could get 20k off that. I think at the moment, probably at least 10. So, but yeah, do you know what? I would go in at 180. I would go in at 180 as a starting point. 180, 185, 190 top end. So yeah, that's how I'd approach that one. See how you get on. Sometimes it depends, sometimes the seller has to get the full price to be able to move, so hopefully you've got one where they can have a bit of flexibility there. Richard, thanks Alex, no problem. Richard, recently found out I'm pregnant. Congratulations, Emma Lawrence, you are pregnant, that's fantastic. Is that your first one? Let me know in the comments, love to know. Do we need to let the lenders know you have a mortgage offer? Okay, you've got a mortgage offer. Okay, so you don't have to let the mortgage lender know you're pregnant, okay? You would only have to let them know once it affects your income. So if okay, so how far pregnant are you? That if you're just early days, within the first trimester, something like that, then I would say no, because it's going to be 6-7 months, whatever it is, until that you go on maternity leave, and it then affects your mortgage lender. trimester. Brilliant. Early days. Excellent. Who's the mortgage lender as well? I think Nationwide are quite flexible with maternity leave as well, even if you're late on. But yeah, I would say just to clarify, it's more to do with your income than, you know, your personal situation. So, you know, if you can move in to your property, it's Santander, yeah, I think they're okay as well. But if you can move into your property before your income changes, then you're going to be all good. Obviously, if your purchase went on for months and months and months, and then your income changed, that's when you would need to let the lender know. I hope that makes sense for you. Shane, and by the way, you know, good luck with the pregnancy and your child there. Beautiful news there, Emma. So, Shane, how do you see, in your opinion, 5-year forecast? Okay, well, you've asked for it, so I'll provide it. So it all depends on what's going on in Russia. It depends on inflation. You know, that has a knock-on effect. So I'll give you what I think the 5-year timeline is going to be. I think in the next couple of years, it's all about bringing inflation down. So I don't think we're going to go back to the historically low mortgage rates that we've seen anytime soon. Do I think there's going to be a housing market crash or a recession, even though technically we're in a recession now, but it's not affected the housing market like it did in 2008. So I don't think we're going to see a house market crash personally. I think house prices will come down. I think inflation will come down. I think rates are going to stay roughly where they are. I don't think the Bank of England is going to move too much more after this. We might have another movement, but I think they've done all the heavy lifting already. You know, we've gone up almost 2.5% in a short space of time. So in 5 years, I think that we're going to be more stable than we are now. I think rates might be similar. I think we're going to have more schemes available. I think that's the market we're going into now, more sort of schemes. And I think longer term fixed rates are going to become more normal. And I don't know why they've not ever been in the UK market. We've only ever had options of 2 years and 3 years and 5 years. It's not been too long that 10-year fixed rates have been available, but there are lenders like Kensington, Habito. They're now doing, well, you can choose a fixed rate anywhere between sort of 2 years to 40 years. So, you know, if you've got a 30-year mortgage and a 30-year fixed rate, if your circumstances suit that particular setup, then it's a no-brainer, because then you go the whole 30 years without your monthly payment changing or your rate changing, no matter what happens in the market. So that could be, you know, that could really sort out the mortgage market, couldn't it? As long as there's flexibility that you can move and things like that within that term. So 5 years, I think there's going to be more stability and longer term fixed rates and more sort of schemes available to help people move. RVB, sorry, joined late, so you might have answered this already for someone. Still asking, should I buy a house in the next 2 months or not? Yeah, so we have touched on this, and it is the most common question I ever get asked. Should I wait? So, like I said before, if it's affordable, so wait for, you know, a couple of weeks for the dust to settle. Now this another rate has, you know, increased again, the mortgage lenders are going to put their rates up, and then they'll probably bring them down a tiny bit once the market settles again. So get to that point, work out your affordability, work out your property budget, and if it's affordable and you can make the move, then I'd make the move. You know, if you can put up with the market while things are tough, then when they get better, you know, look at that as a bonus. I've always said waiting is a dangerous game because things can change so much. It could be another 10 years before you're in a position to buy a property again. And during that 10 years, you could have bought a property and be paying off equity and all that sort of stuff. Even though rates are higher, you're going to get a discount off the purchase price. And if you can make it work now, then take it. You know, if you've always got an opportunity to get onto the market, get onto the property ladder, then always take it. That is my advice, not to wait, because over the length of a whole mortgage, which is 35 years, 25, whatever it is, anything you lose now, you're going to gain later throughout that term. You know, if you buy now and property prices come down, you might think, oh, I wish I waited. But over the whole length of the mortgage, you know, what goes around comes around, basically. It's going to even itself out. Hope that helps. DM, would I be happier in my own house regardless of the mortgage rate, is the only question you can really answer. Okay, so that's, yeah, okay. Yeah, I see what you're saying there. That's the question that you need, you know, everyone needs to ask themselves. Am I happy in this property right now, regardless of whatever's going on? And yes, I would relate that to affordability as well. Can you afford it? If rates have gone up, so property prices are going to come down. So it's, you know, it's but there's a lag, so you've got to wait for the property prices to come down, or just offer lower. Just go in lower than before, starting from this moment now. And if it's all affordable, then great. Ideally, you want a bit of a buffer. You don't want to, you know, max yourself out to the very limit, because what if rates go up again? So, you know, you want a buffer for sure. So yeah, that makes sense there. All right, guys. So I'm going to wrap things up now and go and have a late 3 p.m. lunch. And yeah, it's been good chatting to everyone here and answering your questions. I'm going to be making lives, doing lives a lot more now, moving forwards. So definitely watch out for them. If any of you do want a free chat, you know, any of you have asked your question, you want a free chat, the link's in the description. Just book a free chat with me. We can discuss your affordability, what it looks like, how much the rate is, the monthly payment, all that sort of stuff. We've got access to over 100 mortgage lenders, so we'll find you the best deal for your circumstances. We've got other ways of borrowing more than what you normally can, and you know, fixing that in so it doesn't change. Things like that. Everyone's circumstances are different, so feel free to take advantage of that. And I would say, no matter what your situation, you know, the first step as a first-time buyer is, I will go and have a cuppa in a minute. First step's always to check your credit file. That's where it all starts from. You know, you've got to do that, see where you are. Quite often there's voters' roll records which are wrong or incorrect or not even there. That's going to cause a problem when you get an agreement in principle with a lender. You might have missing commitments which aren't showing on your credit files, therefore not giving you the history that should be there. And finally, if you've moved home and forgot to update your address somewhere, you might have a missed payment or two that you weren't aware of. And these are all going to affect you when you get a mortgage. Mortgage lenders use Equifax, Experian and TransUnion to assess your data. So it's best to get, we recommend checkmyfile, you know, because they have all three providers on one report. And it was basically made for first-time buyers, this report. It is pretty awesome. I've put the link to download your credit file in the description below as well. It is free and you can cancel after 30 days. It's £14.99 thereafter. Right, I'm going to go and have that cuppa. Thanks for that, Shane. Live conversation, great. Glad everyone enjoyed it. And I'll see you guys